Welcome back to the Crypto News Today podcast. Sometimes the biggest stories aren't about charts, candles, or ETFs. Sometimes they come from the shadows, from courtrooms, and from raids that change the shape of this market forever. Today we're doing a deep dive into what is already being called the largest crypto seizure in British history, and one of the largest in the world. 61,000 Bitcoin, worth over £5 billion at today's prices, seized from the hands of a woman who lived under false names and promises, running a fraud that touched more than 100,000 victims. She has now pleaded guilty in a London court. And what happens to those coins could decide not just the fate of one case, but ripple through the entire crypto market. This is the story of Jimin Qian, also known as Yadi Zhang, the woman at the center of a bust that is shaking crypto to its core. It begins with a raid. A cold London morning, Hampstead. Police enter a mansion that looks like any other in one of the city's richest suburbs. They are not looking for cash or art or diamonds. They are looking for something harder to hold: keys, devices, laptops, phones, scraps of data that open the door to digital treasure. Somewhere inside are the clues to a hoard of unimaginable size. Investigators later revealed that it was here, in 2018, that they found the thread that unraveled everything. Behind ordinary walls, hidden inside digital files, sat one of the largest stashes of Bitcoin ever connected to a single case. 61,000 coins, frozen in time, waiting for someone to claim them. The woman behind it, Jimin Qian, had built her story long before London. In China, she pitched returns that glittered too brightly to ignore. 300%, she promised. More than 100,000 victims signed up, chasing the dream of fast wealth. It was a classic scheme, a web of lies dressed in the language of opportunity. When the crackdown came, she fled. A false passport in hand, she became Yadi Zhang. In London, she slipped into a new identity, touring luxury homes, presenting herself as a businesswoman with deep pockets. Behind the scenes, her empire of fraud was collapsing, but her Bitcoin remained, tucked away on wallets that only she could touch. Until the knock on the door. Until the search. Until the day her secret turned into the UK's biggest crypto case. In 2024, the arrest came in York. By September 2025, the trial reached Southwark Crown Court. There, on a Monday morning heavy with history, she pleaded guilty to possessing and transferring criminal property in the form of Bitcoin. The number stunned even seasoned prosecutors: 61,000 coins, worth over £5 billion. The press called it the world's largest crypto seizure. The police called it a turning point. And for the market, it lit a fire of speculation about what comes next. Because here's the truth. It's not just about one woman's crimes, it's about what the UK government now holds. One of the largest single Bitcoin wallets on Earth. Bigger than most exchanges. Bigger than almost any corporate treasury. A pile so vast it could, at least in theory, rattle the entire market if it were ever dumped at once. Traders and analysts immediately began to ask the only question that matters. What happens if the UK sells? Let's talk about what we know. In recent years, the British government has built a new legal framework for seizing and managing crypto assets. The Economic Crime and Corporate Transparency Act gave authorities the power to seize, detain, and recover coins more directly. That means, once courts sign off, the state doesn't just hold the Bitcoin, it can legally dispose of it. Auctions, sales, or redistribution. We've seen this playbook before in the United States. When the government seized Silk Road coins or hacked exchange funds, it didn't dump them on open markets. It ran auctions, or placed them through over-the-counter sales designed to minimize disruption. Even so, those auctions often ended up looking, in hindsight, like fire sales. Billions were left on the table as prices later surged. But in the moment, the disposals didn't crash the market to zero. Analysts have been careful about numbers, but the consensus is clear. If the UK unloads 61,000 Bitcoin all at once on public exchanges, the shock could be brutal. Thin liquidity means even a few thousand coins can move the price hard. Now imagine tens of thousands. Some market structure experts estimate a block that size could slice anywhere from 3% to more than 10% off price. Maybe more if panic spirals. And that's without counting the psychological impact. Headlines alone can move markets faster than any sale. But there's another path. If the UK takes the OTC route, breaking sales into chunks, placing them with large institutions quietly, the impact could be muted. Traders might never see the candles they fear. It would be drip, not dump. Volatile, sure. Tradable, definitely. But survivable. That's the line most analysts repeat. The impact isn't preordained. It's path-dependent. Think about the precedent. When long dormant wallets moved this summer, holding 20,000 Bitcoin untouched for 14 years, crypto Twitter panicked. Was a dump coming? Was a whale cashing out? But those coins moved quietly, off exchange, and the market shrugged. That's how serious sellers behave. They don't torch themselves by spamming market sells. They arrange discrete deals at discounts and walk away with cash without detonating price. Governments, if they're smart, will do the same. And make no mistake, £5 billion is incentive enough to be smart. Still, the shadows of past blunders hang heavy. Traders whisper about Brown's bottom, the infamous sale of UK gold reserves at the bottom of the market in the early 2000s. Billions lost in opportunity cost. The idea that Britain could repeat history with Bitcoin isn't just fear-mongering, it's an echo. Sell too soon, and $5 billion today might look like a tragedy tomorrow if Bitcoin climbs to 150,000, 200,000, or more. And analysts are not shy about those numbers. Cointelegraph reported just this week that some see a parabolic run to 150 to even 300,000 if resistance levels break. Cameron Asgar, a technical analyst who tracks Bitcoin cycles, is calling for a move to 120 to 128,000 by the end of the year. If he's right, those coins become even more valuable with each passing month. That's why the guilty plea isn't just a legal milestone, it's a market one. Traders are already watching the blockchain for movements tied to those seized wallets. If coins start flowing into OTC desks, the signal will be calm execution. If they start flowing onto exchange deposit addresses, panic could ignite instantly. We've seen it before. We'll see it again. The market doesn't just react to reality, it reacts to perception. And perception here is everything. Behind all this, there's the human cost. More than 100,000 victims in China defrauded, their savings siphoned into promises that never materialized. Some of those people may never see restitution. Some may fight in court for years. The British legal system may eventually send a portion of recovered funds back, but the process will be complex. Exchange rates, cross-border claims, fluctuating valuations. Lawyers will feast, victims will wait, and the market will speculate. The story also carries surreal details that remind you how greed warps reality. Investigators found journals where Chen described dreams of building her own micronation, a fantasy called Liberland, where she imagined being worshipped as a goddess. It sounds absurd, and maybe it is, but money of this size breeds delusion. That note, scribbled in a digital diary, tells you everything about how far from reality this case had drifted. Now, here we are. The UK holds one of the largest single Bitcoin wallets in the world. Courts will decide sentencing. Civil recovery orders will decide restitution. And at some point, those coins will move. When they do, the market will flinch, then adjust, then move on. Because that's what markets do. They digest even the biggest shocks and keep trading. But the lesson is clear. Crypto is not beyond the reach of the state. It is not untouchable. It is governable, traceable, and, as this case proves, seizable. So what's the takeaway for traders listening right now? Watch the addresses tied to this case. Track flows. If the wallets stay quiet, the market will calm. If they stir, pay attention to where they move. Watch macro, because a weak dollar and political uncertainty are still the bigger drivers of price. And watch the psychology, because this story isn't just about 61,000 Bitcoin. It's about trust, fear, and the realization that nation-states are no longer spectators in this market. They are players, with balance sheets that include your favorite digital asset. In the end, the guilty plea of one woman in Southwark Crown Court is more than a headline. It's a reminder that for every chart pattern and ETF filing, there are stories like this shaping the path of crypto. Stories of fraud, pursuit, seizure, and the heavy hand of the state stepping into a space that once thought itself untouchable. the UK Bitcoin bust will be remembered as a turning point. The only question is whether it becomes a footnote in a rising market or the spark of a sell-off that proves just how fragile confidence can be. Drop your thoughts in the comments, hit like, follow, and we will see you at the top.